this is a situation that is going to be a headache and potentially a catastrophic event in our future. You need to have probably about at least a weighting of 10% of your net worth in diversified assets outside of dollars for sure.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Gareth Soloway, the Chief Market Strategist at InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
Hey, thank you so much for having me, Elijah.
Definitely. Now, we really wanted to have you on because you're an expert technical analyst when it comes to the markets, right? You do trading for a living. So we really wanted to have you analyze the precious metal markets for us, because one of the things I've been hearing is that gold and silver potentially could rise significantly in the coming months, and especially silver. Now, I know you have a slightly different position on this. You actually, if I've heard you right, are actually more bullish on gold, and you're a bit cautious when it comes to silver. So do you want to start with gold and kind of give us your take on what's happening with the gold charts right now?
Yeah, absolutely. So one of the reasons why I'm a little bit more bullish on gold right now is basically you have this massive amount of money printing, not only from the federal government, but since 2009, the Federal Reserve has been doing quantitative easing, which has just been nonstop money printing, pushing money into the stock market through means of buying bonds and getting liquidity out there. And it's creating this inflationary environment. We're already seeing the inflation hitting things like Bitcoin, as well as, commodities like oil have risen tremendously recently. And if any of you guys out there that are watching, and I'm sure everyone is aware of the food prices. I mean, you go to the grocery store almost every time, either the cans of something are smaller and the same price, or the price is up for the same size of box of cereal. So the inflation is out there, and that gets me very bullish on gold. One of the reasons why I'm a little bit more cautious on silver is that I do think that the reopening trade, because in silver is an industrial metal partially, the reopening trade and the bullishness about the reopening has really pulled forward some of the demand or prospective demand for silver. And so it just puts me in a little bit more of a cautious standing, because I think we're going to have this unbelievable reopening where demand for goods and travel is going to be intense. But I do think you'll have a fall off about a year from now once people just spend all that money right off the bat. And that kind of makes me just a little wary, not knowing what the economy will look like down the line when we're not doing stimulus and paying, people, sending checks in the mail every couple months. So that's kind of where I stand there. Now, just to briefly go into the technicals, let's take a look at my chart here. The gold chart recently we've seen it kind of come off of this longer term high here and trade down. And now this is the daily chart of the GLD. And the daily chart of the GLD just recently really did something bullish for me. You can see here we traded to a low pivot, and then you had this bounce up in gold or in the GLD, and then we traded down to a double bottom. And this got my attention last week, that we had these two nasty down days last week. And then what I love to see in a chart, and this goes for a stock chart or a commodity chart, is that you basically in 2 days had buyers swoop in and reverse that entire move. And anytime you see that in a chart, it's very bullish. And what it basically signals is that there were buyers waiting there, and not just small buyers. These are institutional buyers of gold. And they, as soon as they saw that discount in gold, they came in full force and bought gold up. And you can see today, again, gold is higher. You have a little bit of technical short-term resistance right here on the GLD, just below 164. But again, I do expect a break higher in gold as the inflation kind of gets more robust over the coming months.
Now, when it comes to silver, if we could switch now to the silver chart, I'm hearing from a lot of people, a lot of technical analysts, and a lot of people who are paying attention to the silver market, that it looks like it could, if it broke above the $29, $30 level, it could skyrocket to 40 or 50. Now, like you said, you're more cautious on silver. So I really wanted to get your take on that analysis that a lot of people are really saying right now that we could see silver skyrocket. I want to get your alternative take.
Yeah, so in all fairness, long term, I do like silver. So for me as an investor and a trader, I'm more of a swing trader, which has like a 1 to 3 month, maybe 6 month outlook. To be clear, if you're going out multiple years, I think all the commodities are going to do very, very well. Maybe oil is a little bit more suspect as the changeover to alternate energy comes on. But for silver and gold, there's going to be demand because I don't really see how the Federal Reserve can exit this situation of printing money. If you remember in 2018, the Fed started to say, oh, we're going to raise interest rates. We're going to cut back on this free money system. And the markets threw a hissy fit and dropped 20% in like 2 months. So it's going to be a tough situation for them to ever exit totally, which means a continual printing of money going on, which should be inflationary and therefore good for commodities. Now on the silver chart, just in the short term, and we're talking, 1 month out or so, this trend line down here concerns me, right? So we broke below on this trend line here and then made a bear flag and kind of came down. Now we did recover here, but we're still below this upsloping trend line. So I think what you were saying, Elijah, is that a lot of people are saying when we break out above these highs, you can get your next leg up. I'm actually in tune with that. I just want to see that happen before I get fully bullish. And what you'll notice here is this upsloping trend line. Look at how this trend line is getting closer and closer to this point as well. So if you see silver trade up to this area here and then finally break out above this high, then absolutely silver has upside. But for me as a shorter term investor and trader, I want to see something first that gives me that bullish bias before I jump on, because I would worry that maybe silver comes down another 5 or 10% before it starts making that move to the upside. Just in terms of downside support, this would be a big level down here to watch on the silver SLV chart.
So that's about $20.50, or what level is that for silver?
Yeah, on the SLV anyways, it's around 20.75. I'd have to see what that equates to on the silver chart itself. But yeah, somewhere in that vicinity of 20 to 21, right in that vicinity, yeah.
Do you see it would be possible for silver to go below that?
It's definitely possible. The next level of support would be around $18. But I do think, again, as long as we continue to see inflation and a strong economy, and again, we're going to have this reopening trade that's going to be epic. It's probably going to be the biggest in history of this country. With all this pent-up demand of people staying indoors. And remember, we've had situations in the past where, World War II and so forth, but you didn't have the type of money going into people's pockets where they weren't driving to work, so they were saving on gas, where they were still working from home, where they weren't allowed to spend money on travel and stuff like that. And then in addition, the government's sending out checks. So there's so much money right now in a majority of people's pockets that you're going to see this robust reopening and then a little bit of a fall off. And that's really the kind of the hazy portion that I just don't know. And what I would say is if in 6 months we haven't broken out on silver above those 12-month highs, then I would start to worry that you're going to take a dip as the economy just takes a little bit of a dip, kind of slows down just a little bit.
Now, what about the other precious metals, platinum and palladium? If we could look at those, because I know you're actually bullish on palladium, you've said, which it was a little bit of a surprise to me because we've already seen such a big run. Can you explain a little bit about why you are bullish on palladium?
Yeah, so right now, and I don't have the chart up for you guys here to show you, but I can just describe it, is right now you're hovering under a key resistance level at around the 27.75 level on palladium. And that right now is resistance, so it has to be respected. But if palladium pushes through that, it should make a leg up to about the $3,000 level. So again, just to be clear, I think that, again, palladium will trend higher, but it has to show us that breakout first. And again, just to keep in mind, I'm a technical trader in that, charts dictate what I decide to do. So I may have a longer term view on where something is going, but I won't necessarily go hardcore bullish or buy into something until it triggers a technical point. And for palladium, that's right around 27.75. I'd want to see a weekly close above that, and then you could hop on board for about 3,000. It is longer term overbought, and you have to respect that. So it may not break out there, but certainly a level to watch.
As for platinum, kind of on a fundamental level, what I've been hearing is, it's still below the price of gold, which historically that doesn't happen that often, right? So fundamentally, it seems like platinum is undervalued compared to gold. On a technical level, what do you see?
So on a technical level, platinum's had quite a run from the lows, obviously, in 2020. Again, being partially an industrial metal as well, or a major industrial metal, that really took a hit back then. If you look at the high pivot just before COVID, it was right around 1,050. That was just before it dipped all the way down to really about $500 or $550 on platinum. One little interesting tidbit here is that if you take that level, so basically it had a $500 dip. If you add that 500 in, we're kind of hovering right up in a measured move, where again, if you take that high before COVID to the low of COVID, and then if you take that amount and add it to the breakout above that high of COVID again, and again, it's a little hard to describe it without showing it, but I apologize, I don't have that chart on my system here. But basically, we're hovering right up in that range. So I would continue to expect potential weakness, much like silver, until it shows me a breakout on that. And I honestly think platinum could come back to about 1050 before finding major support. 1050 would be a buy level, though, big, strong buy level.
Now, another asset that's seen as kind of an alternative currency to the dollar and other currencies is Bitcoin. Now, we've seen such a huge rise, and it's probably the one asset that's probably risen the most throughout history, right? And it's just like, what's going on with this cryptocurrency? But what is your perspective right now on Bitcoin?
Yeah, Bitcoin is absolutely remarkable. We have seen such a crazy run, and this is just to show you how unusual these moves are. So with my members, we were in Bitcoin in the 9,000, 8,000, 7,000 range. And then, when it got to, close to 15, 20,000, we were unloading, because it was getting back to those 2017 highs. And here it has just ripped to basically 60,000. Part of that is scarcity. So we know that Bitcoin, obviously the max run on Bitcoin, or the max amount of coins, is 21 million that will ever be in existence. But also it's the adoption of the institutions into it that have run it higher. Now, having said that, I do think Bitcoin is at 100,000 within a year or two, but I wouldn't be a buyer up here. One thing to remember, and people have such short-term memories, but if you look at Bitcoin's previous tops, it always has these 50 to 60% corrections in it. And that has happened all the way back to the beginning of Bitcoin. Even back in 2017, when it corrected from 20,000, it actually went as low as about 3,000 to 4,000 at the lowest point, but really settled in at around 7,000 to 10,000. So what I would say is I love Bitcoin, but I personally can't buy it up here. It's too lofty. I would look for a significant kind of 50% or more retrace, and then absolutely be a buyer. And again, folks, it comes down to just understanding the metrics of what's going on here. The US, the United States, is in a situation where there is so much debt that if interest rates rise too much, then we can't pay our debt back. So they have to keep interest rates under wraps to some extent. I mean, we're still going to go above 2% on the 10-year, but it can't get out of control. And the Fed has to keep printing money with the government to basically pay that debt off. So you're going to have this system, even though none of us like it. It's the only way this country can ever pay down its debt is by printing more money. And that's going to be good for the metals in general, longer term, as well as cryptocurrencies.
Now, what do you see happening then longer term if the Fed you're saying they have to continue with easy money policy, they have to continue creating currency, they have to keep interest rates low? That just seems incredibly inflationary. How can that not just turn into like a 1980s situation where we have runaway inflation?
Yeah, and you're so right on that. I mean, it is one of those situations that the Fed has put themselves into. They boxed themselves into a corner here. And it's one of the biggest things that keeps me up at night is trying to figure out how do they get themselves out of this corner? Because again, if it's not to say the Fed won't tighten a little bit. They're going to ultimately be forced to tighten by interest rates creeping to 2% and a little bit above. But if you look at each of the last major recessions, like in 2008, 2009, interest rates were, up here. If you go back to 1999, we were up here. And every time we have a collapse, interest rates go lower and lower. Like recently, basically in this latest situation, we were down to 0. And then they creep back up, but they never get back to the highest levels. And again, it's a situation I wish I knew the outcome of how it's going to come about. I don't know if they introduce a digital dollar and kind of, rope in the debt by saying, okay, a digital dollar is worth 10 US dollars in print. I'm not really sure. And I don't want to get people all riled up or freaking out on this, but this is a situation that is going to be a headache and potentially a catastrophic event in our future. Whether it's 5 years out or 10 years out, I'm not sure, but it is something that we're going to have to deal with. I often talk to people and say there might just be a mass forgiveness of debt in the world. I don't know. I wish I had this answer, but what I would definitely say is protect yourself. Obviously you don't want to have all your money in inflationary assets like gold, silver, and Bitcoin and crypto, but you need to have probably about at least a weighting of 10% of your net worth in diversified assets outside of dollars for sure.
And what about like the current stock market? Because a lot of people are looking at that and seeing it as extremely overvalued, right? That they say it's in a bubble, but others are saying, it actually, they're still bullish on it. It could go higher. So what kind of approach are you having right now, kind of looking at current market conditions to the general stock market right now?
Yeah, so I'm in the camp of thinking that many stocks are overvalued. I have a hard time being long names like these value names that have gone up exponentially. While Boeing is a great reopening trade, if you look at the amount of debt they took on, they actually are valued at basically where they were pre even the airline issue with the Boeing 737 issue because of all the debt they took on. Same thing with stocks like American Airlines. Even though American Airlines isn't back to its pre-COVID stock price, the amount of debt that they took on absolutely puts their valuation on par with pre-COVID levels, maybe even higher at this point. So I do think the valuations are high. Again, the Fed is the one that's going to be blamed of that. I mean, the government a little bit because so many of the stimulus checks went into the stock market as well. But every month, every week, in fact, we're seeing new record inflows from average investors putting money into the market. By the way, that's a sign of a top. If you look at every previous major market top, when you've seen the small investor come in gangbusters into stocks and equities, that's when the market is putting in a top. And basically, I look at it like this. The institutions are the ones that hold trillions of dollars in stocks, right? The only way they can ever unload that amount of stock is by coaxing the small investor in 100%. And I know that's very cynical to say, but again, this is just from history of me trading all the way back to, the late 90s in this market and watching, every bubble and every collapse that has followed.
So you said earlier that really people should maybe have around 10%, and obviously we can't give financial advice, but like 10% in the precious metal sector. If the stock market is also overvalued and there's a risk of inflation holding, cash, then where else can people really put their money?
Yeah, and that is a great point, right? So I do think that there are areas in the market where you can be pickers and choosers of different stocks. In fact, let me show my screen again here. This is just one stock that we've been, accumulating recently with my members. And again, let me share my screen here. But basically, situations like this get me interested. This is Viacom. I'm sure we've all heard about the Archegos hedge fund collapse, where basically there was forced liquidation in names like this. VIPS is another one here that was caught in this downdraft. And you're going to see these stocks dropped from $47 to sub $30. Viacom was over $100, down to about $44. One of the things, and this is a great just educational lesson for everyone listening and watching, is that when you get a situation where a stock drops 50 or 60%, but it's not company specific, meaning that Viacom didn't say, oh, we're going to have bad earnings. They didn't say, oh, our business stinks. Basically, this was forced liquidation, and you're getting Viacom at a basically 60% discount from the recent all-time highs. Those are situations where, as an investor, I do jump on board. One of the things that's nice about Viacom here is that it trades at a basically forward PE of 10, which is not that rich for this environment. And also, you have a scenario where it's paying about a 2+% dividend. So again, I wouldn't necessarily be long the S&P as a whole here, but there are certain stocks that are attractive to me. Another name, GSX. This one's actually having a big move today. But again, same kind of thing. The stock was $90. Forced liquidation caused it to drop down to basically $30. These give you some opportunities. So, I wouldn't fault anyone for having as much as 25% in crypto / gold and silver and the commodities. But I also don't want to, imply that you don't want to be or have some cash on the sidelines to act in good situations. I think real estate is overvalued as well, but having, owning your own home there's nothing wrong with that, obviously. And there are other opportunities that will jump up over time that you want to act on. So again, stock exposure, assuming it's done properly with good analysis, and then gold and silver and crypto.
All right. Well, it'll be great to, in the future, maybe look at some of those opportunities that might pop up. But Gareth Soloway, we really appreciate your time today. If viewers would like to hear more of these interviews, please hit the subscribe button and the bell icon. And if people would like to learn more about your work, where can they find you?
Just come find me at inthemoneystocks.com. You'll see my name at the top of the website with the 2 services I offer under there, and you get my live trades as I buy, sell. I post them up there, plus daily videos. So very cool stuff. And Elijah, thank you so much for having me. It was really a pleasure.
Definitely. Thank you so much, and God bless.
Thank you.
Physical silver and gold in your hands. Personal service, competitive prices, and 0 complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.